They're going to remain choppy. They're going to go up. They're going to go down. Until there is a decisive action taken, and we think we're hearing about that from President Trump here in the U.S. just a little while ago this afternoon, there will continue to be fear and perhaps even panic. So that's one step to the positive. Of course, the crisis in oil and offsetting what's taking place, you know, between the Russians and the Saudis is really what precipitated today's drop. And it would be great to see some action or some relief or some resolution on that front as well.
And so how are we seeing people handling the markets and the volatility in different parts of the world?
Well, I think if we just look back to what occurred on Monday, so Tokyo stock index was off 4%, Shanghai 3%, the U.S. in the 7s. So I think that kind of gives you an indication of two things. One is the impact of oil, you know, energy being one of the largest exports that the U.S. has, one of the biggest contributors to the global energy industry. So that was especially tumultuous. But also, Rachelle, let's face it, you know, the U.S. is anywhere from 4 to 6 weeks behind Asia in the spread and therefore containment and hopefully eradication of the coronavirus. So there is a little bit of catching up to do there in terms of getting that under control. So you've got both of those factors coming together, but clearly the U.S. and Europe performed far worse than Asia in terms of the effect on equities on Monday.
Now, Dan, it's understandable as to why industries on the front lines like tourism and hospitality are really taking a huge hit from COVID-19. But then even stocks that are seemingly unconnected, like orange juice, were being sold off cheaply. What's happening there with some of these other stocks?
Yeah, I think in general there is just a fear of recession and therefore contraction in the economy and therefore consumption being affected and altered. But I've got to tell you, Rachelle, you and I have lived through several different cycles so far, and this irrationality that creeps in, and when we try to read the tea leaves and interpret it, can also drive us crazy. I think markets will correct. I think they will begin to come back. Again, some measures have been announced here in the U.S. that hopefully will lead to that taking place. But I think some of it is inexplicable, and I certainly think it's uncalled for. But people feel this way, and that's what's happening.
Certainly behavioral psychology there kicking in there. But how much does all this weigh on markets that were already due for a correction even before this event?
Well, that's something other observers have chimed in on, that the market was overpriced, that we're at the end of a bull run here. This cycle has just been going on for too long. I don't buy that. I really don't buy that. I think we have two incredibly tumultuous factors that came together today with, again, oil really being the straw that broke the camel's back, and, you know, these persistent fears at this point in Europe and North America about coronavirus. So I think it is more of that than it is a general consensus that stocks are overpriced and there needs to be a correction just to normalize things.
And in terms of what central banks can do, I mean, with interest rates still historically low in many parts of the world, what other tools do the Fed and these other central banks have at their hand to really counter some of the fallout?
Very few. I think you summed it up nicely. You can't go further than zero. You know, and then, of course, there's an inverse effect on yields for treasuries that are already in circulation. So you've got to be extremely careful about that. I think, Rachelle, that it shifts now to the administration here in the U.S. and things like payroll tax reductions, relief for hourly workers, paid time off, things that will help employers, especially small and mid-sized employers, to stabilize their workforces, to continue to have disposable income, whether it's to live or to somehow find its way back into the economy. I think we're almost at the extent of what central bankers can do.
Now, in terms of corporate news, we did see some companies doing well, for example, Walmart in this situation. What sort of opportunities can be had in a market like this, both for seasoned and perhaps new investors who are just trying to get into the market?
Well, I think if somebody believes they're a genius and they could call a bottom, they might start climbing back into tourism or airlines. For myself, I think it's very early to do that. There have been ups and downs of investors chasing pharma companies where they think that's a key to perhaps alleviating or containing coronavirus. So I think it's very difficult with any certainty, other than taking a long-term view and being a value-oriented buyer and saying this is irrational. Oil stocks correcting by 25 to 50% today, that's just not going to be the case for the long term, maybe there's time to do some structured buying on an efficient basis and kind of dollar cost average back in.
And just quickly, we have about 15 seconds here. If there's one thing that you think we should really be keeping an eye on, as obviously investors are continuing to have their nerves fraying at the moment, what would that be?
Keep your head. Remain calm. Again, I pointed out you and I have seen all manner of cycles, and this is slightly different as they all are, but don't lose it. Don't cause greater problems. That saying you have if you were ever a lifeguard as a kid is don't let the victim drown you. Okay, so remain calm and stay alive.
All right.